Not all altcoins perform the same in a bull market. Some categories consistently outperform others, while some only shine for short periods before fading into obscurity. Every bull run has dominant narratives, and understanding which types of altcoins have the most potential can help you position yourself for higher returns while avoiding the coins that will crash once the hype dies down. Today, we're going to break down the three main types of altcoins that historically perform the best in bull markets, how to identify them in this cycle, and where to track data to stay ahead of the crowd. The first type of altcoin that tends to dominate in a bull market is Layer 1 smart contract platforms. These are blockchain networks that serve as the foundation for decentralized applications, DeFi protocols, NFT projects, and more. Ethereum is the most well-known, but in every bull run, new competitors emerge, promising faster speeds, lower fees, and unique innovations. In 2017, Ethereum led the market because it enabled the ICO boom. Almost every new token launch was happening on Ethereum, which drove massive demand. By the end of that cycle, Ethereum had grown over 3,500% in value. In 2021, new layer ones like Solana, Avalanche, and Terra, RIP, surged as they competed for the market share. Solana in particular saw massive adoption because of its fast transaction speeds and low fees, leading to a price increase over 11,000% that year. In this cycle, we are seeing a strong resurgence of layer ones, but the difference is that many of them are now building alongside Ethereum rather than trying to replace it. Solana has regained momentum after its collapse in the last bear market, but new contenders like Aptos and Sui have entered the space, both offering high-speed transactions and different consensus mechanisms. However, the real growth in this area is coming from Ethereum's Layer 2s. Ethereum Layer 2s like Arbitrum, Optimism, and ZK Sync have seen massive adoption with billions of dollars in total value locked, TVL. These networks allow users to interact with Ethereum's ecosystem, but with significantly lower fees and faster transaction times. If you're looking at this sector, some of the best resources to track its performance include L2Beat, which shows total value locked on layer 2s, and DeFi Llama, which provides data on the projects being built on top of them. The second type of altcoin that tends to perform well in bull markets is infrastructure tokens. These are projects that provide essential services for the crypto ecosystem, such as decentralized storage, Oracle networks, liquidity providers, and blockchain interoperability solutions. One of the best historical examples of this is Chainlink. In 2019 and in 2020, while most altcoins were still struggling to recover from the previous bear market, Chainlink was already gaining traction because it solved a major problem in DeFi, which was providing reliable price feeds through decentralized oracles. By the peak of the 2021 bull market, Chainlink had increased over 14,000% from its 2018 lows. Other infrastructure projects that have performed well include the Graph, which serves as an indexing protocol for blockchain data, and Filecoin, believe it or not, that's an oldie but a goodie, which provides decentralized storage solutions. Now, these types of projects often see strong demand because they are necessary for the broader crypto ecosystem to function. Now, in this cycle, infrastructure tokens are once again becoming important, especially those tied to real-world asset tokenization, AI, and cross-chain interoperability. If you're looking to track this sector, Masari.io and Token Terminal provide valuable insights into adoption and network usage metrics. The third type of altcoin that tends to perform well in bull markets is high-risk, high-reward speculative plays, which include meme coins, low-cap gems, and trending narratives. These are the most volatile and unpredictable, but they can also generate some of the biggest returns in a very short period of time, which means that timing them is probably the most difficult part. Now, every bull market has its meme coin mania phase. In 2021, Dogecoin surged over 15,000% in a matter of months, fueled by social media hype and endorsements from Elon Musk. Shiba Inu followed with a massive rally, making some early buyers millionaires. The key takeaway from these moves is that meme coins have no intrinsic value. They are entirely speculation driven, and their success is based on community engagement and viral marketing rather than real world use cases. Now, in this cycle, we are already seeing new meme coins take off. Just like in previous bull runs, retail investors are piling in. The difference this time is that more meme coins are launching on different blockchains beyond Ethereum. Solana has become a hotspot for meme coin trading, with some tokens experiencing massive pumps before fading into irrelevance. Now, aside from meme coins, other speculative plays include new narratives that gain traction in the bull market. In 2017, it was ICOs. In 2021, it was the NFTs and the metaverse tokens. In 2025, looks like AI-related tokens and real-world asset tokenization are leading the speculation cycle. Now, the key to playing this sector is recognizing when the hype is at its peak and having a clear exit strategy before momentum fades. For tracking speculative narratives, sites like CryptoRank and CoinGecko's trending section can provide insights into where money is flowing. Social analytic platforms like Lunar Crush can help gauge community engagement and whether interest is being artificially inflated. We gotta hate those paid shills, huh? So, how do you balance these three types of altcoins in a portfolio? The best strategy is diversification based on your own personal risk tolerance. Layer 1 platforms and infrastructure tokens tend to be more stable compared to speculative plays. If you are more risk averse, focusing on solid layer 1s and infrastructure projects may be a safer approach. If you are comfortable with volatility and higher risk, allocating a smaller portion of your portfolio to speculative plays can provide opportunity for outsized returns, but it's crucial to recognize that most speculative tokens do not survive past a single market cycle. Many investors make the mistake of going all in on high-risk tokens because they see the potential for massive gains. The problem is that without proper risk management, they often lose everything when the market turns. So even if they're lucky enough to make those profits, they're not smart enough to keep them. Now, a smarter approach is to scale into positions gradually, taking profits along the way, and always, always, always have an exit plan. To recap, the three types of altcoins that tend to perform the best in bull markets are layer 1 smart contract platforms, infrastructure tokens, and speculative plays like meme coins and trending narratives. Each of these has different risk-reward profiles, and the key to success is understanding when and how to position yourself in each sector. Now, here's my favorite part. I want to hear from you. Which category of altcoins do you think will dominate this cycle? Are you focusing on layer 1s, infrastructure plays, or high-risk speculative bets? Let me know in the comments. Now, if you want to learn more about how to navigate crypto markets like a pro, check out learningcrypto.com. It's the best place to get real, practical crypto education. Thank you so much for watching. I'll see you in the next video.